morning, everyone. Thanks so much for being here today. And Dina, thank you so much for making the time this morning. As our lovely MCs mentioned, you're over at Lux Capital as a general partner. I know you focus on tech, women's health, a lot of different areas of investment. I just want to level set to kick off, right? We've heard a lot of conversation on stage today about interest rates coming down. It's the era of free money, rah, rah. Is that what you're seeing? What have you been seeing over the past 6 months or so?
Yeah, well, first of all, thanks for having me. Delighted to be here. You know, venture is an asset class in finance that has to think 10 years ahead. So we don't necessarily immediately see the implications of what's happening from a day-to-day perspective on the markets. That being said, it's a tale of two cities in venture. And so you've got the AI side of things, and now I would also add perhaps the defense tech side of things. I know we have one of our companies presenting right after me. And then there's the everything else. The everything else has not quite seen that exuberance yet. The AI and defense tech is benefiting quite a bit from some of these tailwinds.
What will it take for the everything else to catch up?
Well, I think we're all waiting with bated breath for exit opportunities. And it's been very slow for several years now. At the end of every year, when I'm doing one of my prediction, interviews about what the next year will look like, we're all hopefully optimistic about what the IPO market will look like. But it remains to be seen whether we're actually going to see some real healthy IPOs. And then, the M&A side of things has also been a little tough, certainly with some of the pressure from the current administration around that. So there's a bit more hope around that to come as well.
That brings me to the idea of Trump 2.0, which I'm hoping to get into with you here. A lot of optimism on the stage about what the next 4 years look like. Mark Rowan saying he's incredibly optimistic to kick off the day. As an investor yourself, but also an investor who focuses on women's health, how does that rah-rah attitude sit with you?
Yes, I think, not to use the phrase again, but I think it's also, again, a tale of two cities. Let's talk about the venture side of things, and then we can get into the women's health and the health tech. On the venture side, I also sit on the board of the National Venture Capital Association, so we spend a lot of time with legislators on the Hill trying to advocate for policies and for changes that will benefit the entire industry, that will benefit the founders in whom we invest. And there are some things, I mentioned FTC and so on, that perhaps, could open up a little bit more under a new administration. And so that may present some broad macro excitement in the industry. But when it comes to health and when it comes to women's health, I don't think that many folks in that space necessarily share the same optimism. I think there's a lot of concern for autonomy. But at the same time, oddly, quite a bit of optimism. And the reason that I say that is because we already sort of experienced this. In fact, I did an interview with Yahoo Finance right after the repeal of Dobbs, where I said I had seen, and I'll say this is true today, an influx, almost an inundation of inbound from investors as well as entrepreneurs who are particularly interested in women's health, who see capital as a means of capital deployment as a means of action. The investors, are one side of it, but the innovators are actually what give me the most hope. The entrepreneurs in our portfolio, many of you might know Kate Ryder, founder and CEO of Maven Clinic, Melissa Tarran from A-Life Health, Ellen DeSilva from Summer Health. These are entrepreneurs who are in it for the long run and who see what they're doing on the private sector side as a way of providing services which are taking care of an evergreen need for healthcare. Let's face it, regardless of what changes on the regulatory side, regardless of who is in power in the Oval Office, healthcare needs don't go away. They won't go away. And so the opportunity for entrepreneurs to step in and use technology to create really valuable businesses, but ultimately to serve the needs of advancing human health for women and for families is perhaps more important than ever.
I remember in that Yahoo Finance interview after the overturning of Roe v. Wade, you talked about the massive increase in sales that Maven saw, which is a women's health-focused health tech company. Have you seen a similar groundswell in investment post this election? What does the reaction function look like?
Well, I think it's too early to tell, but I will say that I have seen, certainly I'm talking to all the companies in our portfolio regularly and to other like-minded investors who deploy capital in this space. There's a little bit less shell shock than there was previously. Now it's like we've done this before, we've seen this before. I think there's perhaps a bit more concern around the public health side of things and what might happen there. But when it comes to women's health investments and women's health companies, not a lot will change immediately. remains to be seen how many of these sweeping changes will affect the companies in terms of the work that they provide. But for now, it's carry on, and the work is more urgent, more important than ever.
Another aspect of the macro picture I want to talk to you about is this idea that women are getting richer. They're inheriting more wealth. I think it's $80 trillion expected to be funneled to women by 2030. As women get richer and they are becoming the biggest investors, is there an opportunity in venture, in private investing, for women to both seek out better returns but also higher impact that you talk about?
Yeah, absolutely. I mean, when it comes to, we just talked about women's health. I'll use that as an example. Women's health is an area that represents, of course, half the population. 80% of the dollars spent in healthcare are actually controlled by women. Neil Shaw, who's the chief medical officer of Maven Clinic, coined a term which I like to piggyback on, who says that women are the chief medical officers of the home. And yet, this category was categorically underinvested in. It was seen as niche. Literally that word, for many, many years. And it still represents a very small percentage, not only of dollars deployed in venture, but also on the R&D side of things. So there is a massive opportunity to unlock here. And the fact of the matter is, a lot of the people doing that deployment are also women, because for a very simple reason. It's natural, intuitive to us. We live it, we experience it. And for a long time, when the investors were largely male, and if you talk to some of these early innovators like Kate, she'll tell you her seed rounds, even her Series A, 90% of the investors she was talking to were men. Still a lot of the investors are men, even in women's health, but their diligence process was talking to their wives or their daughters. So that is changing, and I'm on boards of women's health companies with a lot of men who are starting to see that this is not just good for the world, but it is good for business, that there is a real opportunity to create value for our shareholders, for our LPs. And I think that's something that we'll start to see lots more of, hopefully coming from women.
And Maven just hit a milestone, right? A $1.7 billion valuation, I believe. Does that officially put the idea that women's health is niche to bed, or is there still more work to be done?
Well, I think the idea hopefully should have been put to bed a long time ago.
Well, hopefully.
Yes, and Maven was, in 2021 became the first unicorn in this space. They are continuing to trailblaze, but what we all really need to see is some exits. And so I think that, again, as the market starts to open up, hopefully we'll see more of that these are not only incredible private companies, but can be generational businesses that are durable and hopefully, can become public entities. And so.
What do you watch to indicate that we're finally heading towards exits? I know this is the big question you always get asked is, okay, is it the exit year, like you said? Mm-hmm. What are you looking at that maybe investors in the room can also start to kind of copycat to indicate, okay, we actually are finally seeing the year of IPOs come back in?
Yeah, I mean, I wish I could say I was Nostradamus on this. I don't think I necessarily am, but we look at, what the crossovers are doing. Mm-hmm. We have a lot of conversations with, public investors. We look at how the very few comps we have in this space, but how those comps are performing. We look at sort of the pace of growth capital and how that's changing. And we look at, macro, right, like everyone else.
Is the macro starting to signal a sea change the way that we've seen, at least in the markets, and just the euphoria?
Not quite euphoria yet, but there has been a little trickle on the public side, at least this year, which is more than we could say for the last couple of years, and so hopefully that bodes well. And here we are, just it's only been a week or so, right? So we have to see the impact of what will happen with the administration changing in January. But I certainly have heard a lot of optimism.
And is I can't believe how I've gone 10 minutes into this and haven't mentioned the Fed. This is clear that we're right after an election result, but how much is that macro picture of the moves of the central bank going to play into what we see with IPO exits next year?
A lot, certainly, yeah. A lot, and I think it always has, and it always will, and that's sort of the elephant in the room.
Yeah, I think another big aspect of the market rally that we've seen beyond the tailwind from the Fed is, of course, the AI rally and the AI euphoria. Have you seen any of the AI goodness hitting the companies that you follow, specifically in women's health. Like, I know we talked about this on our pre-interview call, but I can't believe that the options that women have for giving birth, they're still the same that my mom had, like epidural or natural. And my friends and I in the group chat are kind of baffled that there hasn't been some massive new evolution that we can look forward to, right? When is the AI goodness going to hit women's health?
I'm actually really excited about what's out there. There's a lot happening, but let's remember the actual percentage of dollars going into R&D in women's health is less than 2%. So as long as less than 2% of research money is going into this space, we're not going to see crazy breakthrough. Yeah. That is changing. You know, this past year, ARPA-H had this $100 million initiative to fund women's health research, real moonshots, just like they did, you know, with other sectors. We're seeing everything from investments in artificial womb technology, incredible advances on fertility tech, AI in particular being used. We have a company in our portfolio called A-Life, which is revolutionizing the way that embryos can be selected and optimized for that. Early detection of cancer, lots of advancements on that. Early detection of things like preeclampsia. As you know, I personally suffered a near-death experience with postpartum preeclampsia that couldn't have been predicted. And I've started to see some technologies that are actually looking into early detection of these types of diseases that can be deadly to women. So there is a lot out there. It just takes a longer time horizon, and it takes a lot more capital at the earliest stages. And at Lux, we love to invest at those early stages, and particularly in breakthrough science. And so we have the opportunity to invest in, you know, companies that are really just an idea and an incredible, you know, researcher, and turn that into a viable, durable business.
How did that experience that you mentioned, postpartum, and the health impact that you personally had, how did that impact how you look at investments, what you're looking for, and just your perspective on what's next?
Yeah. So I have 3 children, and my youngest is 14 months. So just over a year ago, I was just about a week postpartum, and I was at home already when I had the worst headache of my life. And truly, if this had happened with one of my other kids, I probably wouldn't have survived. But because I live and breathe women's health, somewhere in the back of my mind, I had registered if I have a headache, I should check my blood pressure. And I happened to have a cuff because I had this emergency kit that I bought during COVID. Turns out my blood pressure was off the charts. It was like 200/99. I didn't even know what that meant because I've never had high blood pressure. 3rd kid, never. And Maven Clinic saved my life. Literally, I was so fortunate to have the chief medical officer on speed dial. He triaged me. I quickly went back. By the time I was admitted to the emergency room, they told me if I had been 15 or 20 minutes later, I probably would have had a fatal seizure. And I was in the hospital for 5 days. So that experience really reminded me of why we do what we do. I shouldn't be so lucky that I happen to have, you know, this chief medical officer on speed dial. Technology and AI now should make it this accessible for every human being in this country to get access to information and care when they need it. And so, although it was the most terrifying, you know, health scare I've ever had, it really energized me into the kind of work that we do. And when it comes to AI in particular, it is being applied in more and more areas. We're just at the precipice now of beginning to see the implications. It's changing so rapidly, so quickly, and it's every company in our portfolio is applying it or building on it in ways that are revolutionary.
And it sounds like you see AI as a way of democratizing access to health so that someone who doesn't have the chief medical officer on speed dial has a fighting chance as well.
Absolutely, and everything else, right? Yeah. For clinicians to, you know, spend their time caring for patients and not doing administrative work. For researchers, we are looking at a company right now that's in the regulatory and compliance space for clinical trials. Doesn't sound like the sexiest topic, but making that process more efficient is going to be what leads us to these better breakthroughs down the road. So we're looking at all aspects of the healthcare industry.
And specifically on AI, do you even look at a pitch that doesn't have AI mentioned 1,000 times?
Well, you know, every entrepreneur now has to have their AI slides, certainly, but we can also see through that. It's pretty clear when you're just kind of like, oh, and here's the AI of it all, as opposed to something that's actually really being built on this novel new technology. And so it's not a criteria that I necessarily need to see, but if it makes sense and that company's not looking at it, they're not going to be able to keep up with the times.
And interestingly, OpenAI obviously just had a huge funding round, the biggest in VC funding ever at $6.6 billion. Do your LPs want Lux getting in on OpenAI funding?
I mean, our job is to return money to our LPs, and the way you do that in venture is you buy low and you sell high. And so hopefully we're looking at the next OpenAIs of the world, and we believe that we are, and being able to build ownership early and to see before it's obvious. We like to say that we turn the impossible into the inevitable. And so if something is already at that stage, the return profile looks a little different than it would if you're investing in those really early stage companies.
How are you finding the next OpenAI? What does that look like?
Yeah, so we just launched a new initiative, which is called Lux Labs, some of you may have heard of, where we incubate companies. We are doing everything from spinning research teams out of big tech. I worked for many years at Google, and I used to work with a lot of these researchers. A lot of those public tech companies now are not investing as much in the R&D side because they're focused on the bottom line. That offers a lot of talent that we can look at. And so we have a company in our portfolio based here in New York called Osmo, which is an example of that. They're literally digitizing scent. That's right, scent, like your nose. It's incredible. In fact, they just launched a tool where you can use AI to create your own scent. I happened to use it recently, and I literally described a scent, and it was mailed to me just a few days later, and it's exactly as I envisioned it. So, that of course is the sort of the fun side of it, but this technology can also be used to detect disease, to help manufacture pharmaceuticals, and so much more. So we love to invest in those kind of technologies coming out of academia, out of big tech. We invest in incredible entrepreneurs as well at the earliest days. That's our job, is to find that talent.
So heading into 25, what would you say will be the VC buzzword coming up here? Is it still going to be AI? Is it going to be something else?
AI, I think, is not going anywhere. I think perhaps we'll start to use more specific terminology because, AI itself is not exactly. I was working on AI a decade ago at Google, so it's not new. But what's on top of that? And I think we're going to start to look at more of sort of the AI applied to picks and shovels, as opposed to just sort of the chat GPT of it all. And so companies like I mentioned that are doing, things like regulatory and compliance, AI being applied to biology, AI being applied to manufacturing, AI being applied to defense. We've got Brian coming after this. So those types of things I think we'll start to see more of now that the sort of original euphoria is dissipating. Yeah.
Well, as we wrap, I do want to mention you're also an author, and we've got your latest book here, Lena Mo, CEO, children's book author, can be added to your massive resume. Dina, talk to us about Lena Mo, what you see coming up next for her.
Sure. So we've got copies out here, actually. So if anyone has a child in your life, I hope you pick it up. I wrote this book out of a personal need. As I mentioned, I have 3 kids, and a few years ago, I went to their preschool to explain what I do for a living. Those of us in the field know it's hard enough to explain to fully educated grown-ups what venture capital is. It was a very tall order to explain it to 2 to 4-year-olds, but I took it upon myself to do that because there was no book out there. And the fact of the matter is, I'm investing in 10 years ahead. We should be investing in 20, 30 years ahead. And if no book exists right now for kids to dream big, to see how technology, literally this book is about a girl who builds a robot, how technology can help solve a real problem and turn it into a real business, we're not going to be able to find those entrepreneurs in the future. So I wrote it for a personal need. I've gotten amazing feedback. Turns out kids like it. It's fun. And in terms of what's next, we'll see. But my goal in writing this book, and the reason I've decided to go with Simon & Schuster as opposed to self-publishing, is I want this book to be in every library around the country. I want it to be in schools, and so I'm also donating 100% of proceeds to charity as well. So it's really more of a passion project, but it's been really fun, and I hope you all can grab a copy and that you like it.
All right, well, Dina, we'll leave it there. Thank you so much for joining us.
Thanks for having me.
Really appreciate it. Thank you.
Thanks.